The mythical aspects of blockchain still play an important role in the industry and the technology. Just about everyone who's been involved in the space for longer than a few minutes have heard of Satoshi Nakamoto and the vision of decentralization that started it all. However, the industry is shaping up to be quite different than many of its earliest participants may have thought that it would be. Blockchain technology and crypto still play an important role in the lives of many individuals, but institutional capital is playing a huge role within the space from both a development and an investment perspective. Recently, finance magnates spoke with Agada Nameri, general manager at 21M Capital. 21M is the blockchain-focused subsidiary of iAngels, an Israeli-based investment firm. Nameri shared her thoughts on market trends in blockchain, the impact of regulations, and how her company is working to shape the future of the blockchain space. Agada will also appear as a panelist at the upcoming Finance Magnates Barcelona Trading Conference. For more information, visit btconf.io. Agada, can you just start by telling us a little bit about yourself and how you got involved in the crypto industry?
Sure. So I started my career in law. I was a corporate lawyer for a few years, working primarily on VC, M&A, and capital markets. And about 10 years ago, I was fascinated by the Israeli tech ecosystem, which you probably heard about, Startup Nation and the amazing things that are happening here in the tech space. And I felt that I had the skills and the capabilities to get involved from a business perspective. And so I joined an accelerator. I ran an accelerator program for a few years here in Israel. And 3 years ago, I joined iAngels. iAngels is a very unique type of VC in the Israeli landscape, but also globally. It was founded about 6 years ago by two female founders, Shelly Hod-Moyal and Mor Asya. They come from different backgrounds. So Shelly is an investment banker by training. She worked for various investment houses like Avenue Capital in New York and Goldman Sachs. And Mor comes from a technological background. She went to an elite unit in the Israeli army for intelligence, and she went to the Israeli version of the MIT, which is called the Technion. She's been coding since the age of 16 and worked at companies like SAP and Amdocs and IBM in both computer science, but also corporate strategy. And so I joined them about 3 years ago, and got more familiar with the fintech industry and fintech space in general. And as part of that, we got involved in the blockchain space. About 3 years ago, we were early investors in one of the leading companies in the space called Simplex, and also in eToro. So we kind of, we got exposed to this space pretty early on. We're not OGs, but we got familiar with the technology and the space about 3 years ago. And in 2017, when the ICO market started booming, we were really well positioned to take an active role in the space. So maybe a bit about kind of how iAngels is structured and what we do. So iAngels is a leading VC and investment platform in Israel. We work very similar to a VC. We have our own team of analysts and legal and finance, and we focus on early stage investments in Israel, in the Israeli tech space. But our structure is different. So instead of kind of raising a fund and deploying the capital like a traditional fund, we have an online platform where we share all of our due diligence with a community of investors in 50 countries around the world. Thousands of investors that look to us to see what we invest in Israel and invest alongside us in individual deals, or kind of in a managed account where we tailor an investment strategy for them, and then deploy the capital. So given this structure, we had a lot of flexibility to get involved in the crypto space, and we had a mandate basically to do that. And in 2017, we saw that we were positioned really well to do that because on the one hand, we saw a great appetite from our investors to learn about the space and maybe have a little bit of exposure to this industry in terms of their capital allocation. And on the other hand, given kind of our very intensive work in the years preceding that in investing in early stage technologies, we saw very significant good deal flow come our way. So we were able to develop, our thesis and our strategy around how we want to invest in the space, how we want to get involved, and introduce that to our investors. So we started really investing heavily in 2017, and in 2018 or late 2017, we started our first fund to invest in the space, primarily in early stage technologies in the blockchain space. And in 2018, we formed officially 21M Capital, which is the subsidiary of iAngels focused on our blockchain activities. So investing in blockchain, but also advising and helping companies figure out how to build their products and how to go to market. And so we've been active in this space for about 2 years, and very excited about what the opportunity, both from an investment perspective, but also obviously from a disruption perspective, generally in tech, and what this industry and technology holds in terms of potential to change people's lives.
Mm-hmm. So is that the primary reason that iAngels was attracted to the blockchain industry in the first place, with this sort of disruptive edge that suddenly presented itself?
Well, yes. I mean, iAngels, as a strategy, invest in early stage technologies in Israel, early stage startups in sectors or fields that are early on in the innovation curve. So we have a focus on autonomous vehicles and autonomous in general, which is kind of at the early days of the industry, and AI, which is kind of in the early days of figuring out how to use AI to actually benefit businesses and create ROI. A lot of technologies around agriculture, agri-tech, water and energy that are kind of disrupting that space, and all of them, kind of the fine line that goes that connects all of them, is that these industries, or we look at industries that are kind of blue oceans, that are not saturated, that the innovation is still at the early stages, where the potential is huge, and there is a potential to help shape how this would look like. And blockchain really fits into that. We got familiar with the technology. We really were fascinated by what this technology holds in terms of potential to really change financial structures, change the way that we interact with each other, change the way that value is being created and being distributed, how decisions are made, how organizations operate. And obviously this at the time, but also now, was still at the very early days of the innovation cycle, and that fits well within our general strategy. So that's kind of how we got involved.
Right, and I really like you said the term blue ocean. That's really a nice metaphor there. And also that when you're an early stage investor in an early stage industry, you kind of have the potential to shape the way that the industry is moving forward. So I'm curious how you see iAngels and 21M Capital what are your goals as far as sort of shaping the way that the blockchain industry is moving?
Oh, that's a heavy question. So we try we try to I think first and foremost, we try to, or we aim to invest in good entrepreneurs that share our core values and the way that we look at the world, and that are trying to really do something good to the global community.
Mm-hmm.
So that's kind of what drives us. Obviously,
Mm-hmm.
we have our thesis around what we like to invest in the specific type of technologies, and where we see value, potentially value being created in the long term.
Mm-hmm.
But first and foremost, we look to partner, and we look at it like a partnership. You invest in an entrepreneur, especially if you come from kind of a VC perspective. You invest in them, and you realize that it's going to be a long way till both of you kind of see the project or the dream come to fruition. So we look at it from a long-term perspective, and we look to partner with people that really, that are good people that are trying to build something that really, does something good for the industry, good for people. So if we look, I mean, we can talk about specifics, but if we look, for instance, at the area of decentralized finance, or digital payments, where we kind of see most potential in the coming years. We look to partner and to support good entrepreneurs, that are mindful of their investors and their community, and that strive to create value to their network, to their investors, to themselves, to the industry that they're disrupting. This is kind of our major focus.
I see. So with that in mind, you mentioned earlier a couple of industries that that iAngels is interested in, and 21M Capital is interested in as well. But can you give you elaborate a little bit more about which industries you see as being most prone to disruption by blockchain, and sort of where you see also the most potential for growth in terms of blockchain systems being built?
Yeah, well, currently, we look at it. We see kind of four major market trends. The first one is crypto institutionalization, meaning you see more and more financial institutions go into crypto, and they require institutional grade infrastructure and services like custody and compliance and data research, order execution, kind of exchanges, and that space is really kind of prone for disruption in the very short term. We see these companies are really companies like T0 or Backed or RSX or BitGo or other companies that are competing with them, really coming in as kind of the first movers to enable financial institutions and the kind of more traditional financial industry come into the space. And they're kind of a bridge, because that's, on the one hand, it's not the dream of, decentralized blockchain, but on the other hand, you have to walk the way. You have to get there somehow. And I think these are really important players that are helping bridge the gap and getting us there. So that's one industry. The other one is digital payments. And that again goes to kind of bridging the gap between the blockchain world and the traditional world. With the emergence of the stable coins, the market is getting prepared for the transition from electronic payments credit cards and such into digital payments.
Mm-hmm.
We see that with, the Telegram TON token, which is supposed to be a digital currency, a means of exchange, and Facebook's Libra and other payment tokens or payment infrastructures, stable coins, and companies like USD coin and Gemini dollar and BitPay. Also companies that are bridging the gap between kind of the traditional way of exchanging value over the internet into trickling down into blockchain, which leads to kind of the third focus for us, which is really kind of going into what we are more interested in is the decentralized nature of blockchain. So decentralized finance is also a market where we see, or a sector where we see huge potential in the coming years. And we also already see companies that are operating in the space and with impressive products and impressive activity, like Maker with MakerDAO and Uniswap and DYDX and Algor and Bancor which is Israeli, and IDEX, and DeFi, like the decentralized finance industry, is essentially conventional financial tools built on blockchain to minimize counterparty risk and remove intermediaries, and so on, which is really the low-hanging fruits of what blockchain can enable, and probably the gateway to other things. And all of these lead me to kind of our fourth major area of interest, which is kind of the supporting or the underlying layer for all of these things to be built, which is kind of the scaling infrastructure and kind of scaling solutions. So if if during 2017 and 2018 it was all about kind of the layer one native blockchains and novel consensus mechanisms and blockchain protocols, that's still interesting, but we see now more or potential also in the layer two solutions, including side chains and different technologies that provide scalability and privacy and interoperability and other kind of solutions to really make the layer one usable for all of these applications that we discussed.
Okay, so I'm curious. You mentioned the layer one is sort of being like the most fundamental thing, maybe, supports all of these other things. So, can you tell me a little bit more about projects, first layer solutions that 21 and Angels are supporting or particularly interested in?
So we invested in a project or in a company called SpaceMesh. It's one of, in our opinion, one of the most interesting projects in the space in terms of layer one. They're creating their own blockchain based on proof of space time, which is a novel consensus mechanism. It was founded and developed. It's still being developed by very well-renowned cryptographers on a global scale, Tal Moran and Lido Bentov. They were kind of the minds behind the concept of proof of space-time, and their vision and their mission is to allow real decentralization of the network in a way that ordinary people, you and me, can participate in the network, can be miners for that sake, without really having to deploy massive amounts of money or buy any expensive equipment,
Mm-hmm.
or find a creative way to establish farms in a place where electricity is cheap, which are some of the issues that we're seeing with some of the other blockchains. So, for
Mm-hmm.
instance, Bitcoin, um, which is the most popular one, and the most widely adopted. At the end of the day, a lot of the power is concentrated in the big with the big miners that's kind of built farms in China and in other places, that have the capital and the resources to really buy the mining rigs and the chips, and keep updating them and so on. So they're kind of building it in a whole new way. Basically, all you need is to have free um, uh, space on your computer, and to lend it to the network for a certain amount of time, and that's how you become a miner. Um, and their entire the entire way that they're building their consensus mechanism is with the mindset. And I mentioned kind of wanting to partner with people that are wishing to create something good or something better for the world. So their mindset is really to create something that is decentralized, that is more fair, that the distribution of value is fairer within the community, that decisions are made in a more fair and inclusive way. And so this is kind of one of the projects that we're very passionate about. We sit on the board. We also help them with kind of strategy. We're involved in strategic sessions. We try to help as much as we can with anything that they need. So also HR and business development and marketing strategies and so
Mm-hmm. Right. Yeah. That sounds super interesting. Especially we had, I think it was earlier this week, this incident with Bitcoin Cash, like two of the mining pools on the network uh, basically, did like a 51% attack, although it wasn't
on.
exactly an attack. It was,
Hmm.
yeah, something to reorganize the blockchain after a hacker, but really fascinating. Thank you for telling me about that.
Sure. I for anybody listening, I really recommend looking into it. It's one of the most fascinating projects in the space.
Yeah, yeah, sounds very cool. Um, so you have these sort of four general places that you're looking where you see blockchain having the potential to disrupt and grow. Um,
Obviously, that's in term of where we in the kind of in the short term or next couple of years we see most potential from an
Mhm,
investment perspective. Obviously, blockchain has the potential to change many other things in the longer term.
definitely.
But this is from an investment perspective, this is where we are at the moment.
I see. I see. So I'm curious, when you're sort of like evaluating projects within,
Mhm.
these four areas, what are the qualities of those projects that you're looking for from an investment perspective? Things that are going to within the next couple of years generate a lot of growth and profit.
Well, our due diligence process, or our analysis, or the way that we look at things is very, very similar to the way that we analyze startups in kind of more traditional industries. We come from a VC perspective, so it's very similar to the way that we look at companies in the AI space or in enterprise software or fintech. We first of all, and I think I stated it more than once, and maybe it's boring already, but we really look to invest in good teams, in honest people that really share our values, share our goals, and we have a certain level of confidence in their execution capabilities. So we look at teams that together make a good team, that they compensate for each other's flaws, and they empower each other. And we look to empower entrepreneurs. We never look to kind of come in and try and tell them what to do. We look to invest in entrepreneurs that we trust, that they know what they're doing. We trust their judgment, and we come in as kind of a driving force, or trying to empower them and help them where they need help. So that's the first one. Second one is obviously a fit within our thesis and what we and how we look at the market potential. So we look at projects where we think, again, and I'll say it, and you like the term, so blue ocean. We look at companies that are built, or projects that are building products or services with large market potential. Also, in a relatively decent time horizon. The third is obviously the technology. So we look at what they're building. We do very deep tech analysis, tech DD, to see that what they're claiming to do is actually possible, and that they are on the right track to actually do that. We aim to invest in companies that already have something built, so it's not just a deck, or in the crypto space a white paper with nothing to show for it. So technology is a very important part, especially in these themes that I mentioned before. It's not kind of given that it's not real dApps yet. So it's less about kind of the marketing aspect of it. It's more about like the core technology that is that they're building. And the fourth or fifth, I don't know, stop counting, is obviously what we're investing in, and our analysis of return potential. So we're happy to invest in both equity, which is kind of where we come from, but also SAFs and future tokens and hybrid models of equity that entitles you for tokens. And we're happy to be, and we realize that from an investor in this space, whereas in VC you might just put in capital and sit on the board and advise. Here in this space, in the crypto space, investors have an additional role, which is not less important, to actually be a part of the network and contribute to the network. So whether it's staking or generalized mining, or other activities that you take within the network to help expand it and to help strengthen it and support the decentralization of it, we realize that this is a very important role that an investor in this space plays, and so we do that. And at the end of the day, as I mentioned, if we invest in equity, we look to see how value accrues to the equity of the company. That's usually not the case in decentralized protocols. So in decentralized protocols, it's usually value is aimed to be accrued to a token. So we look at the token economics and the financial structure of that, and we analyze what would be the return potential, and decide to invest based on all of these considerations together. But I have to say again that if there are any red flags around the team or their honesty or where their heart is, that would be a no-go for us.
Okay, so as an early participant in this space, the regulations around cryptocurrency and blockchain, and have been changing for the last 2 years, and even longer than that. And as an investor that deals with companies who have global users, or will eventually have global users, that each jurisdiction has kind of its own set of regulations for these programs. So I'm curious, from your perspective, as an investor in this space, how has the regulation of the cryptocurrency affected the way that you operate, if it really has had an effect at all?
Well, as I mentioned, iAngels has an investment platform similarly 21M has an investment platform, and we cater to begin with to accredited investors around the world. So from our perspective, in that sense, we were kind of regulated to begin with, or operated under in compliance with public offering rules and so on. But definitely, this industry started. It was when ICO started. It was really the Wild West, and still is in some senses. And there was beauty to it also, because it started off ICOs and public sales and sales of tokens started off as a way to get the developer community engaged and telling the developer community, here we're building this protocol, come be a part of it, participate in the token sale, be part of what we're building, help us build it together, and we all enjoy the upside together, which is a beautiful idea and a beautiful concept. But unfortunately, it didn't, or not unfortunately, actually, because it's part of kind of the mass adoption and visibility and familiarity of this industry with a greater population. But at the end of the day, what happened in late 2017, early 2018, or probably even a little bit before that, is that the ICOs and the public sales did not serve, at the end of the day, a developer community, and mostly retail investors that kind of saw an opportunity to get involved didn't really understand necessarily what they're getting into, what are their rights and protections, and especially what is the risk. And that was really a Wild West. And from an investor perspective, as a VC, we're accustomed to investing in a company's equity, where you have protections and rights, and you in most cases sit on the board, and you're part of the decision making of the company, and your rights as an investor are protected, which was not the case in many of the ICOs and in most of the ICOs.
Right.
So in terms of regulation, in general, regulation is not a bad thing. It's a good thing. It's intended to protect investors, or to protect, John Doe from I don't know where, that invests in something that he might not have, the skills or the capability to really assess the risk. So regulation is not a bad thing, as long as the regulator really understands what they're regulating and the specific characteristics of the industry that they're regulating. And the risk is with regulation in this space is that the regulator will implement regulation that already exists for other things, which is not entirely suitable for this industry. And the risk is that it would inhibit development and of disruptive technology.
Right.
So I think the regulator has a responsibility to really, and I think they're doing it. There is anticipation for regulation in this space, and as you said, for the past 2 years, it's been constantly changing and reevaluated, and that created a lot of unclarity and in the market, and a lot of doubts, let's say. And in 2017, every new announcement of regulation or something in those areas really moved the market dramatically. People were anticipating and they didn't know, and the uncertainty around that created a lot of volatility in the market. We see that less and less today, the effect of that on the market. But just bottom line, and regulation is a good thing, but it needs to come with a deep understanding of the industry that we're regulating, and with being mindful not applying and implementing regulation that will inhibit or even stop the growth of the industry, or prevent from this technology to actually, get to where it needs to go and actually disrupt the industries that it needs to disrupt in the way that it needs to do that.
Right.
I can tell you from an investment perspective, whereas in early 2017 until somewhere in 2018, there were, private sales and public sales. I think most projects were not really wary of regulation. They did it. They did public offerings of utility tokens, which is not supposed to lie under SEC regulations and the like. And as time went by, projects became more and more, I want to say self-regulated, but it's because of fear of future regulation, let's say. And you saw more and more projects avoiding kind of the public sale, coming to more institutional investors like us, raising their capital through more traditional models like VCs and hedge funds and so on, and kind of avoiding the whole risk of having a public sale targeted at retail investors. You saw that with Telegram, which had, we invested in it. They had the most rigorous process in terms of KYC and AML and really, you went through hoops to be able to invest. And it's not that anybody came to them and said, you have to do that. They did it on their own because they wanted to make sure that if push comes to shove, or when regulation actually comes out, they're in a safe zone. And we saw that more and more as time went by. Most of the projects, the decent projects that raised money in 2018, really did that with SEC regulations in mind.
Yeah, definitely. And yeah, you've mentioned a few times how self-regulation is going to really shape the industry. But I'm curious, sort of self-regulation combined with the regulation coming from organizations like the SEC and different jurisdictions around the world. How effective do you think that these regulatory efforts have been, both from a self-regulatory perspective and a external regulatory perspective, at like weeding out, I would say, bad actors from the space, like insubstantive projects, firms that are being built just to sort of like grab money and take advantage. Do you see less of that now, or what has happened?
So first of all, I definitely see less of that now, but I wouldn't necessarily attribute it only to kind of self-regulation and regulation. I think what happened in 2018 was a hard year. It was a difficult year for the industry, and the fact that happened weeded out a lot of kind of the bad actors and the money grabs and so on, because less money was coming in, and the money that was coming in was coming from more institutional investors and more kind of professional investors, the VCs and hedge funds, and the retail investors that were really some of which really came in at the highest point of the market and then suffered dramatic losses. They were kind of out of the game, so that left projects with less ability to kind of do an ICO and get millions of dollars in their wallets within minutes. So the whole thing really weeded out. I do think really weeded out a lot of the bad actors. There are still bad actors in the industry, and there is still a lot of bullshit, pardon my French, in the industry. But it's it's dramatically less than I believe last year and the year before.
Mhm.
There are also different self-regulation plays. I think self-regulation is very important if you want to educate the regulator and you want to kind of make sure that regulation goes in the direction that you believe is the right direction for the industry. So, for instance, we can look at IEOs as self-regulation of the industry.
Right.
The exchanges that are, we can argue maybe some of them are not decent players, but in general, as a concept, you see, these exchanges, they have the ability to look at the projects, to assess their merit, make sure that the founders and the teams have the right checks and balances in place, that the technology makes sense. So they have some of them maybe a higher level of due diligence, and some of them maybe a lower, and that would also kind of be discovered with time. But it's also a way to tell investors, you know what, we looked at it very similar to what a VC does, but kind of with exposure to a larger investor base, and say, okay, listen, we looked at this company, we are willing to put it on the platform because we trust the team and we did a certain level of due diligence and so on. And so this is a decent project. So if you're interested to invest, you can do it on our platform. This is also a move of self-regulation, and I think it's important. I think it's important that would be done well, but it's an important move, and I think a very innovative move in a very innovative space.
Mm-hmm.
And maybe we can look at it as a way that IEOs are replacing ICOs, and there is a higher level of higher professional level in doing so.
Right, definitely. Agada, can you tell our listeners where they can find out more about 21M Capital and iAngels and about you?
Of course. So I want to invite all of the listeners to log into our platform. It's www.21mcapital.com. That's our online platform where you can see what we invest in. You can look at information about our fund, which is done really well over the past year and a half, and read more about the projects that we're involved in, and also see opportunities that we invest in, and invest with us if you're interested. The iAngels platform is on www.iangels.co, where you can take a look and learn more about the Israeli ecosystem in terms of disruptive technology. In iAngels, we invest only in Israeli tech companies, early stage primarily, in 21M, and given also the decentralized nature of the industry, we expanded our reach and we invest globally. So if you're an investor and you want to look, or if you're a project with an interesting technology that kind of fits within what we're investing in, we'd love to get to know.
Okay, Agada, thank you so much for your time.
Thank you. Thank you very much.